Well, that is correct, and of course the weakness started really when the tapering talk took place in May by Mr. Bernanke, and of course, as we know, tapering is pretty much off the table for this year, and it probably remains a 2014 story, if anything. And we have seen a 90% correlation between the Fed's balance sheet and equity prices in the US, and of course that spills over into emerging markets as well. So I think for now the trend remains up because we don't see any tapering on the horizon, at least not for this year. Exactly. Again, you can look at anything. You can look at earnings, you can look at valuations, you can look at GDP growth or whatever. The fact remains that markets have been liquidity driven for the past few years, and all you need to know is what the central banks of the world are up to, notably the Federal Reserve. And with tapering probably not taking place before maybe March next year, we think that the liquidity-driven bull market will continue. It's actually quite amazing to see that emerging markets have bounced back so strongly. And if you look at the US market, you see how little it had actually corrected, and it's still up almost 20% this year. So I think that is probably going to continue despite what everybody else talks about deteriorating or slow fundamentals. Well, given the fundamentals in India, you would not expect the index to be where it is now, but again, it's a liquidity-driven rally, a bull market that clearly climbs a wall of worry, and we think that the rupee has now rebounded strongly. Maybe there's going to be a bit of a pullback there, but the worst might well be over, at least for now, unless you see a change in the interest rate environment. Let's say in the United States, for instance, that long-term rates are starting to rise in earnest, which again we don't really see for the next 4 to 5 months, as long as the Fed is on an expansionary course. So India, like any other emerging markets, the trend for now remains on the upside. Well, again, if you have a short, let's say, time horizon of about 3 months, I think one could probably play a rally that will take place into year end. We'll see what happens next year in terms of Fed policy and other central banks, but I think for now, between now and year end, we should see a relatively benign environment for equity markets, and that of course would include India as well.